Well, good noon, everyone, and welcome to another FS Club webinar. Today's quite an interesting one. We're going to be talking about the insurance sector, insurers, useful, useless, purposeful, purposeless. And we have an interesting panel here today. Joining me is Paul Tappender, who will be leading the discussion, Liz Foster, who's working with Totus Re, and I'm afraid we don't have her webcam here, but we in fact do have Paula Bukowski out there online as well. Will be joining in the panel discussion via telephone. Anyway, for those of you who don't know me, I'm Michael Mainelli. I'm the executive chairman of Zien, and it is truly my delight to be able to introduce these webinars. And I can only do so because our sponsors are actually wonderful people. It's not just that they pay for it, but that they allow us to range widely and freely across subjects to do with technology, economics, and financial services, often with a social purpose. And it's those last two that bring us here today. What is the social usefulness of insurance is a question that you might well ask yourself. Before we get into the subject, just a reminder, the agenda, a fairly typical FS Club agenda. I'll be trying to get out of your way. Paul will be speaking for about 15 minutes, really to set the scene. And then we'll move into a fairly vigorous discussion of questions and answers from you. I would encourage you to use the GoToWebinar facility, which is the way to ask questions. If you email them to me, I'm afraid I'm here with you, and therefore I won't be looking at those emails afterwards. So please ask your questions via the question facility here in the application that's available. We do have quite a bit of time for Q&A and quite an interesting panel, so I would encourage you to ask things early to get your comments in. Finally, just on a personal note, I thought I might just open up things in a mild way. 10 years ago, I was at the Royal Dublin Society in the library, believe it or not, looking at the pedigree of various Hereford herds in Westmeath. And I was at a conference, which was the European Insurance Forum, where I was speaking. And on the stage comes the President of Ireland, Mary McAleese, to welcome us all. And she put something forward which I think might inform us today, and I'm just going to read it out loud. The certainty and confidence that insurance provision brings to all our daily lives, whether business or personal, enables us to breathe more easily, to find the confidence to let innovation flourish, and to engage with the present and the future, chastened by the past, but not allowing the fear of the possible to paralyze us in the present. And I must say, from my perspective, I sometimes wonder if the Irish president's speechwriting team should be taking over the marketing departments of all of the insurers around the world, because this, to me, really is the statement of insurance. It binds us together, and it allows us to lead more interesting and more rewarding lives, because some of the risks that we face are taken care of for us by our fellow man and woman. But on that note, I think I'd just like to turn, and Paul, I'm going to hand over to you, really, because I think you've got a few more comments very much along this line, which I hope it helps us inform the conversation. So over to you, Paul.
Thank you, Michael. Do you want to move on to the next slide, actually, and we can get this discussion going? My role here today is really just to set this up and provide a bit of context on this. I think Michael has mentioned already in that quote from Mary McAleese that insurance has a noble purpose, or it should have a noble purpose, not only for individuals or commercial firms, businesses, but also for society at large. And I think one of the problems maybe we have is that the purpose of insurance has become somewhat bent out of shape by a focus on something which I think is probably largely to do with shareholder value. And I'll say a fair bit more about this as we go through this. But the first point to make is, of course, that nobody gets out of bed to create shareholder value. It is very important in a capitalist society, and it's a good model, and I'm not proposing we should be tossing this out in some way, but I am proposing that if we focus exclusively on shareholder value and organizations use that as a substitute purpose, then we are debasing what insurance can do for individuals, businesses, and society at large. And I think that is a pity. and maybe at root of some of the problems that we're facing at the moment. So total shareholder returns as a concept is a good one. As I say, I'm not proposing we throw that out. It's been with us for a while, at least in current form, probably about 30 years or more. And I'm not proposing either that we should have more regulation, because I worry that legal behaviour is not necessarily always moral behaviour, and I think loading more and more regulation on top of what we already do in insurance is just a dangerous route to take. I think it's going to constrain how we operate. So that raises the question of what do we do? And there's a quote here from the Chartered Institute of Insurers, which you can see there. And I understand that Liz Foster, one of our panelists, was actually involved in that piece of work with the Chartered Institute of Insurers. And we'll hear more from Liz in due course about her thoughts on this subject. So what has the insurance sector been doing given this current crisis? Well, you see some of the quotes here from the chairman of Lloyd's, and also an equivalent comment from the Financial Conduct Authority that there is a big concern about business interruption insurance as well as other forms. And so there's a contrast here of on the one hand, the insurers sounding quite evasive, despite their noble purpose, and the FCA undertaking something which is unprecedented. An unprecedented action in bringing a test case amongst a number of different firms, insurance firms, to try to reach some clarity about the wording related to BI insurance. That starts this week, and so we'll find out what their conclusions are. But the question is, how do we get to this? How do we get to a point where there is this question about what is insurance for and why isn't it actually delivering what we think it's for? So there's certainly the perception of insurance does have to change. And I'll just read a quote here from the US, because of course there are a number of cases out there which are going through the courts as well. And one of the comments of a lawyer for a class action in the US is that insurers will deny almost every claim, even the most legitimate ones, because that's just how they operate. I accept that that's a lawyer, but it is unfortunate we've got to a point where that's what is being said, and that's again a reinforcement of a perception of insurance and how it operates. Of course, if in the US people force through the law, change things, and insurers have to pay out in sort of retrospective change, they're going to be in trouble. They won't have enough to pay out, and legitimate claims on other types of claims won't be payable. So we've got a problem here. There's a mention on this slide here that insurers really have to think about, leaders of insurance companies have to think about how to pass the purpose test in their organizations. And it raises this question of organizational purpose. Are we in this mess because insurers have lost their fundamental purpose in pursuit of total shareholder returns as a kind of substitute purpose for the organization? And so if we move on into the next slide, I think for me, we need to keep in mind Peter Drucker's perspective on this. He was a great management thinker and simple, clear, and I think he's right. The purpose of the business is to create and keep a customer. What do we mean by customers? Well, I've mentioned already, of course, individuals, but also businesses, and of course, society at large. And if we can't create a context in which society at large is more resilient, we have a problem. So we have to be very careful about how we think about organizational purpose. And so I think these are some of the questions that insurance leaders need to start thinking through in a much more substantive way. Why are we in business, and who do we serve, and why should they come to us? And so it may be a challenge for our entire sector, and one of the questions to debate a bit later on is, has insurance failed at all three levels, i.e. the individual, the business, and society at large? And if so, how do we get back to the noble purpose of insurance, creating resilience for individuals, firms, and society at large? Some definitions on the next page, Michael, if you just move us forward. purely to make this point that organizational purpose is not about making money, it is about something else. And you can see a definition which I've got up here about purpose. A consistent identity that transcends product or market life cycles, technological breakthroughs, management fairs, and individual leaders. And you see some good examples, question mark, on the right-hand side there, from Google and P&G and Disney. I like the Disney one. I think that's great. I think it's something that they live. The question is, if you look at Hiscox and RSA and any of the other insurers, I've just chosen these two at random, are they living that purpose? So the does Hiscox actually give people and businesses the confidence to realize their ambitions? Does RSA, through its policies and its wordings, provide peace of mind to individuals and families? Does it protect small businesses and large corporations from uncertainty? I think that is the point of today's debate. We say these things, we have a noble purpose, but are we executing on it? So if we go to the next slide, please, Michael. This is a model I've often used with organizations, just to ask the question of, are we actually thinking about our purpose? And I think one of the things that large corporations tend to do is to focus a lot on strategy and on execution. But they don't necessarily focus on the business model. And the business model bit is that model on the right-hand side. And in particular, I think the red bubbles. We should be asking the question, who are our customers? Genuinely, who are our customers? Does it include society at large? Why should those customers buy from us? And then what do we produce or market, and how do we word, in particular terms, what we produce or market in an insurance context? And I'm not sure that we focus sufficiently on those top three red bubbles. I think that is one of the challenges of the debate for today. If we move on to the next slide, please, Michael. This is a quote actually from Michael in a pamphlet that I wrote a couple of months back, thinking about COVID-19, what happens next. And you see the title there, Has Financial Services Lost Purpose and Flawed? But I like this quote because it's really to the heart of what financial services, and specifically insurance, has to be thinking about. I would hope that people in finance could explain to people outside why finance is socially useful. So you see a definition there of what insurance should be about. I think that I question whether we have lost that purpose in insurance. And that takes us to a poll that we wanted to conduct, which is on the next page, Michael. And we wanted to ask you, as we talk through this context, just to set us up for the discussion to come, given the impact of COVID-19, given the response of the insurance sector to date and continuing issues of trust, will insurers either make trust building a high priority or continue as they are?
Folks,
please
you can
go
see
ahead
the voting button.
make your vote.
Just getting up to the 3/4 mark. Fantastic. So, Liz, Paul, I'm now going to show close the poll and show the results.
Right.
And you can see a fair amount of cynicism here, I suspect.
Yes. So has everybody seen that? Then have we seen that poll?
Yes, that's 34% make trust building a high priority and 66% to continue as they are.
Now that's unfortunate because one would hope that insurers are taking a different view, but there is cynicism, as Michael has said, about whether the insurance sector is going to focus on this in the way that we I hope should. But I've put up some questions here which may or may not be things that we want to pursue in more detail in this discussion or even afterwards. And you see two very large questions there. To what extent have insurance institutions focused sufficiently on their purpose? And then a set of subsidiary questions below that. In particular, it's that third bullet point under question one. What will it take for insurance firms to be seen post-COVID-19 as more trusted, more ethical, and more interested in social protection and in promoting financial stability. I hope it's not more regulation. I hope it's not more government intervention. And then the fourth bullet under that first question, what initiatives or changes can be made in insurance firms to rehabilitate purpose and make insurers more useful and more purposeful, I think is a good one too. It may come down to the second big question mentioned there, which is there an industry-led initiative, public and private, to reinvigorate purpose across the sector? So that insurers start to speak at least with one voice about what it is they're trying to achieve. And so at that point, I'll pause and hand you back to Michael for the next phase of this, which is a discussion around some of these questions and others.
Well, great. Well, that's actually already lit up the boards here. And I just turn, if I could, just quickly, Paula, to bring you in and remind people that you're out there. Do you just want to comment on anything Paul said before we move into questions?
Yeah, I think that's been an important focus on some of what we've been seeing in the media. Thanks, Paul, about, people questioning what is the purpose of insurance and, some small businesses, for example, being concerned about the sort of legal situation, the contractual situation they find themselves in, having thought that they were covered. So thanks for putting that in context.
And Liz, any quick opening remark from you before we move into it?
Yes, it's an interesting opportunity for me, isn't it, as a passionate professional insurance advisor, to address the question. And I've got a lot to say about how we find ourselves in this position, and also a proposition I've got to move the country forward to a much more proactive solution. So, yeah, much to say.
Okay. Well, we've got quite a few comments. I'll start with one from Mike Clark. Mike opened up with, once upon a time, the state happily, if sometimes rather unknowingly, underwrote risks the market could not or would not. Then Flood Re came along. Is it an optimistic fudge? Terrorism excess loss became a state risk, and now Pandemic Re, is being discussed. How does the current version of capitalism best deal with existential or systemic risks that the private sector finds challenging to underwrite? Should the state's chief risk officer, government, be more adept at protecting the private sector from some risks and regulation so that private sector insurance is more readily available and or cheaper? Liz, I'll throw that one to you, obviously, because you might also want to just explain in 30 seconds your TOTUS Re initiative.
Well, that comment, Mike, thank you, plays to the second question on the previous slide. And I have founded TOTUS Re in the wake of the pandemic because you're quite right. Pool Re came into being to address terrorism, Flood Re to address flood. We now have Pandemic Re in the making, but we cannot continue as a society to look to our government as the insurer of last resort, but with no income. And so the purpose of TOTUS Re is to address those risks that sit within the National Risk Register and to bring together the four corners of risk, as I would call them, which is academia, government, the private sector, and insurance, and work together, totally together, entirely together, to create a proactive solution to this situation. It can't continue.
Paula, we've got some of your materials on the website, but you're also undertaking some work with the ESRC. Do you want to talk about that briefly?
Yes, so what we're looking at is risk-sharing mechanisms for pandemic, particularly business interruption. And I think that it speaks very well to the point you just raised. To what extent should the private sector, this is beyond the private sector to deal with. On the other hand, is it government's job to subsidise the private sector so that it can take the less risky risk, or should we be looking at some way of mutualising this across society? So businesses are obviously already the biggest risk holders in this. What level of risk can they afford to hold themselves? Should we be looking at insurance to cover some first layer of that? Should we be looking at insurance in a different way with these systemic risks as partly some sort of societal mechanism that's covered between the insurance industry, the businesses themselves, and ourselves as taxpayers via the government? And I think that's one of the things we sort of need to speak to here was systemic risk. To what extent can we expect the private sector to pay for that? But then if the private sector can't pay for the biggest disaster of our time, what is its value to us, and how should we maybe reconsider some other aspects of its role? And I think that speaks a little to the comments about floodry as well.
It's interesting, the audience dividing here a number of comments would appear to be focused on that public-private divide. How strong is it? How weak is it? I'll read out a few of the comments here. Mike Clark, who had the opening question, was surprised that 34% of insurers, he thought that was surprising it was that high, were actually looking at redressing their purpose. We then get two interesting comments here. One from Robert Woodthorpe Brown, who notes, as you did, Paul, it's an appropriate day for insurers at the start of the court proceedings regarding COVID and business interruption. As a professional reinsurer, I suffered from U.S. courts' interpretations of insurance policies, which had nothing to do with the original intention. So this bit, and then Bob McDowell, along similar lines, says, does the FCA have the locus standing to interfere? It sounds like no-fault capitalism. So how can we, people talk about public-private working together. It all sounds lovely, wishy-washy kind of Blairism. Nobody's ever really making a profit, but nobody's ever really working for the public. How do we pull this apart, though, and give insurers a strong role? Paul?
Well, I think the starting point surely has to be at the individual insurer level. I think one of the problems with this is we can talk about solutions in the form of, well, how do we deal with the pandemic? But there's going to be another crisis coming up sometime down the track, and I just don't think insurers will be ready for that one either. And what the public and the market and governments will eventually do is to say, well, this can't go on. Insurers, you've got to sort yourselves out. And I suspect it would just be more regulation, which I think would just be unfortunate. So I don't think it's necessarily helping. And so I think we've got to address the question of, can we create a better purpose and can we create better trust at the individual institutional level? And then possibly there's an initiative which is broader than that to think about, well, what could we do at the other level, which is sector-wide? That would mean getting quite a lot of people together, but if we could start it, maybe on the back of something like Totus Re that Liz has mentioned, then I think that would be a good thing.
Liz Russell makes a point here. I don't know who, possibly, in fact, Paula, this might be for you. The insurance industry has had 4 months to review their business models in terms of business interruption and general insurance to align with government initiatives, especially as for personal insurance, the R is below 0.9, so the risk is low for the majority of the population. Any comments on that?
In terms of I think one of the things for the insurance industry is, in fact, the trigger for this. Is the trigger something that can be protected by a business? So when we're talking about that sort of a question and the R being low, what's causing the business interruption? What's causing the loss of footfall? Is it a government-imposed initiative? Is it something where a business could be expected to realistically protect itself from that, and therefore it's more realistic for insurance in the way that the existing insurance business model works, to say, okay, you protect yourself from risk, we can afford to insure you because you can be a responsible risk holder for us, as opposed to a trigger which is imposed perhaps to a set of political issues. And I think this gets also at the heart of that public and private mistrust of the two sectors in terms of, so I think, I'm not sure if I've quite got the answer to that in terms of the R rate and the lower R rate and how that relates to insurance, but I hope that speaks to some of the issues that we're looking at with insurers here, which is what's the trigger for the disaster and how well can an individual company that takes out a policy be expected to be responsible for that trigger and controlling it.
Yeah, just a question here from Mike Clark again. Is the panel aware of the IFOA, the Actuaries Great Risk Transfer Initiative? I'm not.
No.
Okay. Mike, thanks for that. We'll dig into that. Moving on. Quite intriguing. Matthew Leach wonders, are we being a little bit premature? As with everyone else, short-term survival will be the high priority. Paul, why is this the time to reconsider your purpose?
Well, I think it's just something that's occurred time and time again. I worry that insurers have had a go at purpose, but in a very sort of weak way in the past 5 years or so, largely to do with climate change and social changes and some employment aspects about employees and so forth. But they haven't really, I think, got to grips with what I call an unconscious bias towards total shareholder returns and not real purpose for customers. Who are our customers and what should we be doing for them? Is this the right time to do it? Yes, I buy the challenge that organisations are focused on survival. The trouble is, as they focus on survival, it comes back to that quote from that US lawyer. It just makes insurers look very bad again. That they can't seem to have a coherent response to big crises, sometimes even small crises, which just heaps more criticism onto insurers, and I think makes it more difficult to actually to operate effectively. So I think, if not now, then when?
Well, this is where we seem to see a division in the audience, really. You've spoken about the need for individual insurers to get their act together on their own. Julian Shawcross says, no, the insurance sector requires a root and branch review. Attempting to rebuild trust within an already broken model is a sticking plaster approach. Build on strong foundations. Any thoughts about that, Liz?
Yes, I think part of the issue, well, the big word is communication, both within the insurance sector itself and from the insurance sector to its buyers. And the market changes that came about when insurer consolidation began, which cascaded to broker consolidation. We then had direct writing and online writing. And the message has been muddled, I believe, that insurance for many has become a commodity rather than a contract. And the wording in that contract is not carefully enough considered. And so instead of comparisons maybe between apples and pears, I think we've got to a point where there's a comparison between apples and stones when people are purchasing an insurance. And because of the loss of investment income to insurers, they started to bulk seek business through intermediaries and various different channels, the ones I've just spoken about. And wordings became weaker, premiums became a race to the bottom, and the value of insurance as that pillar of societal resilience has been lost. And I think one of the most important things that the sector that I value and I love and I'm passionate about needs to do is to get itself together and address where we've got to in insurance and then rebuild the trust. But we can't do it by ourselves. We've got to be open-minded enough to look at possible solutions outside our known area and put ourselves in that position of discomfort and really do some hard work to look and say, how can we do things differently? If we look at the very beginnings of insurance, it was the contributions of many to pay for the losses of the few. The pandemic is the losses of the very many over the contributions of the many, and is not a sustainable way in which to meet the losses of the pandemic. So Paula's work is going to be very, very interesting, and I look forward to working with her on that. But the piece of work I'm putting together is to address this communication issue and to create a collective conversation from all these corners. We've got to do something about it.
Well, we got quite a few. Here's an interesting one to pick at. Matt Hodges Long has asked something which I think it looks at the structure of the industry. Could the panel give their views on the role of brokers and their ability to identify and professionally advise clients on risk management and risk transfer at scale? I think that's quite an intriguing point about, is it the structure of the industry and that division between the broker and the underwriter that might be part of the problem? Paula?
Okay, that's an interesting one. I mean, I do think there is an issue that brokers don't carry the risk, okay, but I do think that they have a role, and perhaps some of the way that the whole brokerage model has been set up over time, it's a little difficult to know if the broker works for the policyholder or works for the insurer and reinsurer. And, I think even with the best intentions in the world, sometimes transferring that role to more of a consultancy role or risk officer type role in the broking industry, maybe moving that strategically, seeing brokers as those who can support different ways of thinking about the rising incidence of risk and the best ways to cover that, might allow some of the kinds of fundamental changes that we're talking about, rather than fee for placement type things, which don't necessarily incentivize the best possible risk approach, but more the best possible placement of a deal.
Yeah, we've seen this, the audience really getting quite clear about the need to be more precise about public and private. I'll read a couple of comments out, which I think will help us a little bit. The first one was Andrew Ross. How do insurers even begin to price and cover for corporate exposure to systemic global losses in water, soils, biodiversities, unless governments take on global responsibility themselves? Interesting point. Tanji Morgan makes, I think, a fascinating point here related to that as well. She says there should be an understanding by buyers of insurance about the coverage they're buying, and the insurer needs to make the terms of coverage clear to avoid the dilemma that's currently happening regarding business interruption. But this is the killer point she makes. Systemic risks do not give diversification for insurers, which must remain solvent. That's an interesting element there. Liz, do you want to comment on that?
Yes. Wordings now, the content of the wording has been weakened, and in order to achieve mass income from placement, insurers have weakened wordings, which has led to confusion. On top of that, we have the race to the bottom on premium. We have the regulator who requires an inordinate amount of information to be provided on completion of a risk. And I think we get to the point where our buyers don't want to read all of that. I understand where the regulator's coming from, but the reality is that we've created an enormous situation which is less and less understood, and in which people are less and less interested until we get to one of these catastrophes. In terms of working private and public sector, risk mitigation has got to be one of the big areas we address, particularly in these national risk areas. And again, that has got to be an open conversation where we look to contribute as individuals, as organisations and as a society to mitigate risks, as well as to find the financial solution when one of these catastrophic events falls upon us. Matt Hodges-Long, if we had time to speak to Matt, presents a good case because he's working on the Grenfell disaster, and Grenfell has really, really opened our eyes to how insurance and society have to work together. Because of regulation, insurance unwittingly now finds itself, in the case of properties which have cladding, unwittingly finds itself unable to operate its usual wordings because regulations have intervened, and that has brought the whole initiative of cladding and readdressing cladding in these buildings throughout the UK to a standstill. Insurance is the key, but insurance has now been penalised by regulations which post-Grenfell have been put in place. So I think we get a picture of just how complex it is to operate an insurance contract.
Well, it's not just the insurers, is it? So there's quite a few questions here and comments about the buyers. I don't quite know where to start because they're all very good comments. Well, let's start with the first one. Tristan Dennis is curious. This is probably more for Paula or Liz. Are there any indicators regarding consumer confidence during this time? Are insurers signing on new business or seeing a flood of claims eating away at reserves? Has there been any sign of the customers leaving, or has it been business as usual?
If I may answer that, the apple pie of insurance is 100%. People who buy insurance because they value it, or because they need it, or because legislation mandates that they buy it. It's how they buy it and where they buy it, which is the key to all of that. So I don't think people will cease to buy insurance. It's their trust which matters to me, and just how much they trust the policy that they're buying to operate for them. And against all of that now, having had what I've said, a race to the bottom on premiums, there is a significant hardening of the market with premiums going up and wordings being more closely looked at than they were pre the pandemic. So buyers are going to find themselves in a very different situation. And I believe insurance brokers will need all their best communication skills to communicate that message to their clients and to those who previously haven't bought through a broker. I think this is a defining moment.
Paul,
I'm just going to add just on that. Part of the problem with this, of course, if you don't look at the FCA action, I mean, they're representing in effect 370,000 policyholders just on BI insurance. Now, to me, that's 370,000 customers who could be extremely annoyed in a couple of months' time if these judgments go in the favour of the insurers, or insurers continue to squirm about this. And I think it's not so much that insurers aren't trying to do the right thing. It's just that the way they communicate this seems to have gone wrong in some way, and people have an expectation that something that either they don't have, or insurers are not actually trying to pay the claim the way it should be paid in some cases. So I think in total, there's a big communication problem, and therefore, as Liz has rightly said, that doesn't help trust, which is low anyway.
Well, Charles Remark says here, I think you've got a great point. In my opinion, insurance is designed to give businesses and individuals the confidence to invest. If more entities bought on the trustworthiness of the insurer and fewer on price, there might be a chance that Liz's wishes would come true. How can we persuade insurers to do this? So that's an interesting one. Because the clients, I've certainly seen it, and that's related to something I've been working on over the years, which has been a comment that David Rawlings made, which is to say that the loss of mutuality has a lot to do with this. And you'll remember people diving in and out of mutuals versus commercial to take advantage of best price and not really looking for the long-term structure of the vehicle. And this leads to an interesting comment by Lloyd Greenside. Surely the premiums of the many to pay for the losses of the many can be achieved by taking a multi-year view. So is that sort of element of the structure wrong? We're selling not on trustworthiness or sound, but seriously on price, and even worse on annual prices. Paula?
Yeah, I'd like to talk to that if I could, because that's actually one of the things that we looked at in the book I wrote on Making a Market for Acts of God, that the contract in insurance used to be based on this kind of long-term relationship when we had less understanding of how to price the risk and we knew we couldn't price the risk accurately. The idea was to have a long-term view, which is sometimes you lose money on claims, sometimes you make it back in other years. But a lot of the changes in regulation after the global financial crisis changed the model of insurance buying and changed that relationship to one that was more transactional, less long-term, and of course that's also shot in the foot by the fact that insurance is typically a one-year contract. And so in that sense, we've exacerbated the short-termism of the industry at the same time as changes in buying, changes in reserving have made it a much more transactional and capital optimization model rather than a long-term relationship model. Personally, I'd like to see, I believe insurance to be a societal good, and therefore I'd like to see the relationship model come back. I believe it's critical to, lack of confidence to trade if you don't have insurance that you can trust. But to do that, we're going to have to fundamentally readdress the business model of insurance, and that may mean multi-year contracts. That may mean that ugly word, mandatory insurance. But if you want to mutualize, then everybody has to share in the risk. So those are just some of the thoughts I've got on how we might be able to rejig this model.
Wow. Paul, this one might be for you. This is for Rupert Stubbs. Having done a pan-European survey in the past on behalf of a big Swiss insurance company, we found that consumers couldn't see a difference between insurance companies or brands. Indeed, they regarded insurance as one single many-headed entity that always ended up getting its money back. Why are insurers so bad at differentiation?
That's a really good point. I think Liz made the point about this race to the bottom on premium. I think I would agree with that. I think that insurers aren't differentiated. I think it's a complex answer. My experience in insurers is that part of the issue is that from a strategic point of view, senior leaders in insurers that don't have strategic conversations about differentiation, they worry more about other things. And I think that this idea of premium and premiums being forced down and costs being forced up has just become so dominant that they can no longer think that way. It was possible for a time that I think I had some hope that the insurtechs would change this because they would operate in a completely different way. They seem to be much more customer focused. But I think they're finding it very difficult to operate for another reason, which is, of course, massive regulatory burden that you need to have and the requirement for huge amounts of capital. So they sort of got into bed with the traditional insurers to operate with them. So I don't think we're going to see substantive change from that side anytime soon. It's a tough one. All I can say is I wish insurers would spend more time thinking about differentiation, and if that was about trust, a longer-term relationship, and things like that, I think we would have a better chance of rebuilding and creating differentiation amongst insurers. But yes, it's a fact. Insurers are not really differentiated at all.
Well, Lloyd Greenside made a further point. Trust can be built not through increased regulation, but by taking a moral or ethical stance. Perhaps we should instead be regulated by behaving with the overriding premise to act in the best interest of the client or business. And they are not mutually exclusive, which I think is an interesting comment there. Liz, there's a question here from Liz Thrussell. Why is a COVID trigger for COVID re so different to a flood trigger for flood re?
Because it's a pandemic. Flood re is within our geographic. Terrorism was within our geographic. Pandemic has hit the globe. Very, very different situation. Very different. And it has long tail. A flood, it's very traumatic. It's very dramatic, but you have a means to resolve that. The pandemic is still amongst us. The flood will have stopped. The terrorism act will have stopped, and you start to rebuild and re-engage. But with the pandemic, it's still amongst us. There's no medical resolution to it at the moment. And so, how long are we going to have the pandemic amongst us? And what are we going to be able to do to mitigate that risk? And that's why I said risk mitigation is a very serious part of the equation. You can't just have a contract and somebody pays a premium for that contract. It's got to have risk mitigation behaviours alongside it so that parties come together. That's why the pandemic is so different.
Well, I've already got comments flooding in thanking everyone, which is always a sign that we're drawing to a close. What I'd like to do is just to perhaps throw one more question to Paul and then ask Paula and Liz to sum up their points. This is coming really from Matthew Leach, Paul. He's saying, as with everyone else, short-term survival will be the high priority. So to what extent is reluctance to pay claims driven by insurance company greed versus more determined, perhaps desperate attempts by customers and their lawyers to get as much money as possible? And what about a society-wide tendency to think that the truth is malleable and merely a matter of alternative narratives? And I've certainly seen customers over the years treating an insurance policy as sort of a bank account, really. You kind of top it up and then you launch your claim. And the idea is to kind of get to a net zero, which defeats the whole purpose of pooling. What are your thoughts on that?
I have to agree that there's a tendency for all those things. It would be very sad, I think, if we then extrapolated that to the whole of society and said everyone's just out for themselves, because everything then breaks down. So I think one has to have hope that people will treat insurance claims in the same way that you would hope they would treat their relationships with family or with other people, or paying their taxes, or having the right to drive on roads which are maintained and so forth. All of that is actually a matter of trust in government and in institutions in a society. But I agree, there's been an erosion of that. I think that insurers can do more to think about this. So I suppose my answer would be, if you look at any individual executive committee in an insurance company, what is the list on their agenda items? What does it look like? And I can tell you, certainly from my experience, that the customers will not be number one. The customer issue will not be number one. It will be somewhere way down. It will be, the current pressures on cost, current pressures on premium, regulation, and then somewhere further on down the list, it probably claims, and not really even, the customer and what we should do with the customer.
Okay. Well, we could go on for quite a bit, and I've got comments here. Julian Shawcross is making a plea for more investment in technical and commercial skills and the ACII qualifications. Lloyd Greenside's pointing out that the risks of the pandemic are not an unforeseen or black swan event. They're just ignored, perhaps caused by the race to the bottom. I remember in a previous webinar I was calling these black elephants. Robert Woodthorpe Brown, I'm hoping, somewhat tongue-in-cheek, points out, why has no one mentioned meerkats? So we'll go through the entire menagerie. But anyway, if I could turn then, just Paula and Liz. Paula first, quick word of summing up how you felt about this conversation.
Very interesting conversation, and I'm looking forward to seeing the full list of questions, because it's attractive to me that so many people are raising the social and the societal issues. I think that big disasters can either exacerbate inequality or make us desire to make society better structured for protection, and insurance is one key mechanism for protecting society. I'd love to see us use this disaster as a chance to get that model more geared to social protection.
Liz?
This is our opportunity. This is the opportunity of the insurance sector to step up, look at itself very closely, and out of all difficult times comes opportunity. This is our opportunity, and I will take it forward.
Thank you. Well, sadly, folks, to say we go. Just to remind you, the conversation, I think, ranged over quite rightly public and private. We had some interesting suggestions on multi-year, on looking more towards financial stability rather than price. What about the return of different structures like mutuality, or perhaps changing the broker-underwriter divide in a novel way that would make it more comprehensible to the consumer? And also this whole point about differentiation. I must say, of all the purposes that you listed, Paul, the one that was closest to Mary McAleese was probably Hiscox, where they talk about realizing our ambitions. It was the one that was closest to that idea of liberating us. And personally, I guess from my point of view, listening to this, the one thing I took away is, whilst it does have to come from within, as you pointed out in your presentation, Paul, it's going to be a societal discussion. And it's got to be one very, very strongly involving the customers. It's not a single kind of industry issue. It's certainly not a single firm issue. And Liz, we compliment you both on the work that you're doing with Totus Re, and Paula on the studies that you're doing with the ESRC. But my job, as ever, is sadly to bring things to a close. So I'm going to thank our sponsors again for allowing us to range this freely. And many of them are involved in the insurance sector, or technology for the insurance sector, or even just promoting financial services as a whole. And so I hope today's conversation shows you the depth of feeling amongst the audience today. And I took heart from that. Finally, when it comes to thanks, as well as our sponsors, I must thank you, the audience. It's really great. Fantastic participation today, and look forward to seeing you. We've got a couple more this week. Tomorrow, a fascinating session on share valuation, the wisdom on price setting for your employee shares. And we also have an event very much on Friday morning related to today's topic, getting back your mojo in financial services. That's going to have a really great guy, Mick McAteer, who's long been a crusader for getting financial services and consumers to work together. So more on this later this week. But to Paula, to Liz, and to Paul, thank you very much. I'm afraid in these days of COVID-19, I can't give you a real audience, so I will bring out my Buddhist applausometer here. And thank you very much for your contributions today. And I hope that this is part of an expanding and more urgent debate for the sake of the industry and, frankly, for the sake of society as we try and move forward. So thank you very much for all of your work today, and we look forward to having you back. Thank you.
Thank you.
Thank you.
Thank you.
Bye.
Thank
Bye, one and all. Then.